little bit later. Angela Calla is here to help us with all the mortgages. Welcome back to the show.
Thank you. Thanks for having me.
It's still kind of a buyer's market, so a lot of people are still in the market of buying, and the prices are somewhat lower still, right?
That's right. And with record low interest rates, people are looking at all different types of options that maybe they haven't considered in previous years.
Right. And we're talking today about the no money down mortgage. Now, why would I want to do that? I guess I have no down payment. But I want to get into the market.
That's right. Yeah. And there's actually two different types of no money down mortgages. The one no money down mortgage is where the lender forwards you the 5% at a higher interest rate for you to have the opportunity to get into the market. Because back in October of 2008, the no down payment mortgages where you could finance 100% for a fully discounted interest rate are no longer available. So this is a product that's actually been around for longer than the 100% financing, but it hasn't been utilized as much because interest rates were higher, and now with 50-year lows, it's more considerable.
But you still have to come up with the 5% because to qualify for CMHC, they still need the 5% coming from somewhere, right?
Right. Well, the 5% actually comes from the lender. So the lender forwards you the 5% to the lawyer's office,
that you can,
so you do have 95%
right. And what's
financing.
The other kind?
Now, the other kind is called a cashback mortgage, but you can't necessarily use that for a down payment. That has to be used for consolidation of debt or for other closing costs, and they verify that to be certain.
So
that
you can't use it for a vacation or anything like that?
That's right.
Oh, okay. So let's talk about, I mean, the pros seems obvious. You can get into the market where maybe you couldn't have before. What are some of the other pros?
Well, the pros are, if we actually take a look at the pros and cons side by side, it's much easier to review.
Okay.
If you take a $400,000 mortgage as an example, if you have no money down, with the interest rate that's available today, your mortgage payment is $2,080 a month. Now, in order to qualify for that, you do have to have a 680 credit score.
Which is good, right?
Which is a very good credit score, that's correct. That means that you don't regularly make late payments and you are very responsible with your credit. And in addition to that, your income is fully provable. So you can be self-employed or you could be salaried, but your income does have to be fully provable over the last 2 years. Now, this is for properties such as condos, townhomes. This is not applicable for mobiles, co-ops, or leasehold properties.
And are these resident occupied or owner occupied?
Owner occupied only, not for rentals.
Right.
And one thing to keep in mind is with a no down payment mortgage, for the example of the $2,080 a month, you do require a combined household income of about $75,000 a year. Now, if we break that down to if you had a 5% down payment, and there's several resources that you can use for a 5% down payment. You can use your savings, you can use RSPs, or you can get a gift from a family member, or you can use a combination of those two. Now, this makes a significant payment difference in what your monthly obligation is. First of all, to qualify for that type of mortgage, you only need an income of $60,000 a year. So right there, we have a $15,000 a year income difference if you do have the privilege of getting the 5%. And with that in mind, you're saving $377 a month.
Which is significant. Now, what are some of the cons, though? We have to talk about some of the cons of this no money down.
That's right. Well, the con is significantly the $377 a month.
That's the significant difference. But if you couldn't get into the market anyways, that also becomes a pro.
It does become a pro. And one other thing to think about, though, and this is one thing that many consumers need to be aware of, and that's why an accredited mortgage professional is essential to consult, because we work on behalf of the client and we're not working with the institution.
Right.
And one thing to consider is that if you are going to take a no money down mortgage, you cannot refinance or sell that property without paying back the full lender incentive. And for the example of the $400,000 mortgage, that's $20,000 in addition to penalties. And that's in the fine print that have to be brought to your attention when you're considering if this is an option for you or if this is not. And you can only take a 5-year fixed rate, so you don't have a choice of terms. Whereas in that same example, Don, if you did have a 5% down payment, your payment can be reduced $712 a month down to $1,368 for the same $400,000 mortgage.
So it could be good if you're going to stay in the home for a while and not be someone who is flipping. So thank you very much, Angela. We're out of time, unfortunately. Angela is also the host of The Mortgage Show, which can be heard on 1410 AM. Thank you so much for your time and for taking out some of the mystery of no down payment mortgages. And of course, we'll have all her information on breakfasttelevision.ca.